Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. These are the names that I have covered in past videos, and I will do a quick review on each of them. In the later section of this video, I will also begin covering these new names. I've put in timestamps, so please use them to skip to the names that interest you. Citigroup is a name I last covered on the 25th of May, in which I said that it is in the bullish resumption phase of its head and shoulders bottom. Citigroup has since rallied and broken above the set resistance of 80.2, 83.01. Now this breakout has increased its upside bias, putting it on track towards the textbook target of 97.49. Stay bearish on Citigroup. On the 28th of April, I cautioned that Chubb Ltd may be forming a double top, a bearish pattern. One of the signs of more downside I highlighted in the last video has occurred, which is closing below the 20-week simple moving average. This occurred 2 weeks ago, and this was followed by 2 consecutive weeks of rejection at the same resistance. This risk of further downside has increased, though the double top will only be deemed complete if there is a weekly close below the neckline at 252.56. I covered Merck on the 25th of May and noted the formation of a falling wedge, which is a bullish pattern, along with price momentum divergence on the RSI, which you are currently not seeing, as signals of a rebound. Now Merck completed this bullish pattern on the 6th of June and has since advanced into the Ichimoku cloud, as well as holding above the 20-day simple moving average. So I expect further upside to prevail, and the textbook target is 96.78. Moving on to names that I'll be covering in future videos, I'll start off with the popular LVMH, the holding company of the famous brand Louis Vuitton. This name completed a falling wedge on the 2nd of July, and this bullish pattern has a textbook target at 571.8. It currently appears to have been rejected by the Ichimoku cloud resistance and could see a near-term retracement. Now any declines over here should be viewed as the correction phase of this bullish pattern and is expected to bounce off either of these trend lines to resume the upside. So bullish LVMH on a technical basis. This next name is a Hong Kong stock. It's Hong Kong Exchanges and Clearing, quite popular in the Asian space. I believe it is forming a rising wedge, a bearish pattern. Another sign of weakness is called an M pattern on the Bollinger. An M pattern forms when the first advance over here touches the upper Bollinger and the second advance does not. Now this is a sign of near-term weakness. The rising wedge requires a breakdown below the support trend line to complete and has a textbook target at 306.8. I recently ceased coverage on dollar Swiss due to the invalidation of a double bottom. I believe another bullish pattern is currently forming a falling wedge. Now price action just bounced off the support trend line and diverged from the lower Bollinger, while the RSI at the bottom of the chart shows price momentum divergence, meaning price action comparatively is lower, but the RSI comparatively is higher. So this is a sign of a near-term rebound. A breakout above the resistance trend line will turn dollar Swiss technically bullish, and the textbook target is around 0.86. Of course, breaking below the support trend line will invalidate this bullish pattern. Another cross that is forming a falling wedge is dollar CNH. We can also see that price action has started to diverge from the lower Bollinger, a sign that downside bias is receding. As said earlier, completion of this bullish pattern will be via a close above the resistance trend line, which will have a textbook target at 7.2427. Breaking below the support trend line alternatively will invalidate this bullish pattern. I will cease coverage on one name in this video, which is on the Euro Swiss. I suspected the formation of a cup and handle bottom in the last video on the 17th of May, but price action failed to push much higher above the Ichimoku cloud. I believe this bullish pattern is no longer valid and will cease coverage in future videos. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like, please subscribe and hit the notification button for more videos like this.